Hello guys, welcome back. And this video is so special because here we are going to talk about the very special candlestick pattern which often appears in our Indian stock market, which is nothing but head and shoulders pattern. So let's get dive in without wasting our time. So we are again back in our charts, and this time we have selected GMR Infra for a daily chart. Okay. Now, how to identify the head and shoulders pattern? The first characteristic is for head and shoulders itself, it will be formed at the very top of the chart. So as you can see, there is a good trend. Okay, there is a good uptrend, and after an uptrend we saw a head and shoulders pattern coming up. Okay, now again here the breakout is awaited. So basically, if we see here, so this will be our first shoulder, this will be head, and this will be a second shoulder. Okay, so basically if we see such kind of a thing, like if shoulder 1, shoulder 2, and head itself, so this is a typical head and shoulders pattern. Okay, now the line which you see here, this one, this line, oops, I'm sorry, so this line which you see, okay, these are nothing but the neckline. It has been termed as neckline. Okay, the most important part of the head and shoulder itself is a neckline. So the neckline is basically nothing but a trend line, but in this case, I would say it's a structural support of 73.70. Okay, where this stock has proven down many a times. This stock has taken the support from there, and as you can see, first and second, there are multiple times. Here you can see the bunch of taking I mean bunch of events where actually in such a way that we took a support multiple times and then we saw a rally. But the first thing, the key thing to note in head and shoulders is that we don't cross shoulder 1 at all. Okay, we may have it, I would say, we may have a chance that we see the highs of it, but we never close above that. Okay, that characteristic itself will form a valid head and shoulder pattern itself. Okay, so first thing, you have to identify two shoulders, S1 head and S2. Okay, once we identify that, we have to see that whether we are reaching this line or not, the high of shoulder 1 or not. Okay, if high of shoulder 1 is breached but closing is not done, then that's fine. I mean that can still consider as a valid head and shoulder pattern. But the most havoc thing is if we see a downside after breaking the trend line, I would say the neckline. If we see a downside here, okay, and if we see a kind of a retest again, very much struggling to get past this neckline, then it's a warning sign that whomever has invested into this has to come out as quick as possible, because then there will be a follow-up selling out. Okay, and possibly the depth can be anything. It can take a support of here, it can take the support of this level, it can be anything. Okay, but here as of now, uh, things are getting formed. There is no breakdown yet. Okay, so the breakdown will form somewhere around after breaching this candle, uh, after breaching this neckline. Okay, so once we breach that we have to check whether this low is sustaining or not. If this low gets sustained and if we get a bounce back, then this can be termed as, if you remember, this can be termed as the bear trap. In the previous video, if you want to have a go through of what is bear trap is, then I will share you the description. I will share you the link in the description. Just go and check that out. So if we sustain above this low, then there will be a bear trap and we get a follow-up buying. And the very next thing we have to check at that level is whether we are able to cross the high of shoulder 1 or not. So basically we're talking about here, this one, high of shoulder 1. Okay, the high of shoulder 1 has to be breached with the green candle, with the closing. Remember, not just the I would say high, it should be closed above this line, okay, and it has to be a closing. Okay, it has to be a closing. just spare with my heading. I'm not so good in this, but I hope you understand. So basically, you have to identify the pattern here: shoulder one, head, shoulder two. Okay, then the neckline. The neckline will be very common. I would say here the structural support we have it. So we have a very common neckline of 73.70. If we get a closing below this neckline, then we have to check whether the low of that breakdown candle is sustained or not. If it does, then it's a bear trap. Okay. If we get a follow up selling down there, then it's a confirmed breakdown, and any retest level after that, we can sell this stock if we have in our portfolio, or we can take a fresh selling as well. Okay. Again, this talk is not for trading purpose. This is not a suggestion. This is just an educational video. We are yet to form the breakdown candle, so we have to wait this for several days, maybe few weeks ago. Probably by by the mid of May itself, we can get a clear picture of what's going on in this stock. Okay, if you want it, we can revisit this stock as well. No worries in that. If you have any questions, do write me down in the comment section. Thanks for your watching.